Is the Schwab US Dividend Equity ETF SCHD still a buying opportunity? And am I planning to still add more shares of SCHD to my long-term portfolio, which currently sits at around 559 shares? Well, if you own any of the Schwab US Dividend Equity ETF or ever plan on doing so, make sure to stick around, drop a like down below because you are definitely not going to want to miss this. So first things first, this right here is my long-term dividend growth portfolio, which currently as it sits has 559 shares of SCHD right now. Now the Schwab US Dividend Equity ETF was a position that I was planning to extensively build out in 2024 and hoping by the end of the year to reach 1,000 shares plus. And as you can see right here, still to this day on one of my dividend growth portfolios, I've been pretty consistently buying about a share of SCHD every single day or so. But just as of recently, things have changed, and I do think I'm going to be taking a small step back on buying SCHD until at least what we see happen in next month's Reconstitution. Now, just to take a step back real quick, the Schwab US Dividend Equity ETF is one of my favorite long-term buy and hold forever style dividend growth ETFs. Now, the ETF's objective is pretty simple. It's to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now, the reason that I, along with so many other dividend-focused investors, are pretty much so obsessed with SCHD is the fact that it's grown consistently over time as far as ETF price. It has a pretty diversified basket of holdings that's relatively boring but consistent. SCHD's expense ratio is extremely cheap, which means as you acquire more and more shares, it's not going to cost you an arm and a leg to hold. But also very important, and especially important to me, SCHD does offer a decent starting dividend yield at around 3.5% or so, but also, even more important maybe, has had some significant dividend growth historically, which of course means, simply speaking, that over time SCHD has paid their shareholders more and more year over year just by holding onto the assets. Now, to go back again for a second, I was planning on throughout this year acquiring as many shares of SCHD as basically humanly possible, or I guess as many shares as I could afford within the constraints of my cash balance on a weekly basis. But because of SCHD's sort of questionable top 10 holdings, I will say that as of recently, I have been re-diversifying some of my cash balance into some other high quality ETFs, such as Devo and even DGRW, just because I'm not exactly certain that I want to go so extensively deep in some of the top 10 holdings that SCHD holds right now. But to be fair, these top holdings that SCHD holds as of right now, filming this video in February, these top holdings are not necessarily going to be the same top holdings as we're going to see in the next few weeks here. Now, this is because SCHD is going to be going through their yearly reconstitution, which means that some names are going to be taken out, possibly, and some names are also going to be added into SCHD. And this is simply because the SCHD does track the Dow Jones US Dividend 100 Index. It says right here in the prospectus, the Dow Jones US Dividend 100 Index is designed to measure the performance of high dividend yielding stocks issued by US companies that all have a record of the following things: consistently paying dividends over time, selected for fundamental strength relative to their peers based on financial ratios. The 100 component index is a subset of the Dow Jones US Broad Market Index, excluding REITs of course. Now, some of the characteristics of all the eligible stocks, we're looking at things like at least 10 consecutive years of dividend payments. So let's say as of right now, some of the stocks within the SCHD ETF, let's say one of them cut their dividend. Well, therefore that stock would no longer be allowed automatically to be a part of the underlying index. Also important, they need to have a minimum float adjusted market capitalization of 500 million USD and meet a minimum liquidity criteria. The index components are then selected and evaluated by the highest dividend yielding stocks based on 4 fundamental base characteristics. Now, these characteristics are things like cash flow to total debt return on equity, dividend yield, and 5-year dividend growth rate. Also, stocks in the index are weighted based on modified market capitalization approach. No single stock also is going to represent more than 4% of the index, and no single sector as defined by the index. So because the yearly reconstitution is coming up very soon here, I just don't see a real reason to go extremely heavy in SCHD as this moment until we figure out which new stocks are going to be added and taken out of the Dow Jones US Dividend 100 Index. Now, let's be real here. I don't think any of the names that are going to be added or taken out are going to necessarily be groundbreaking or shocking. But again, just until this reconstitution happens, and just until we see exactly what we're working with, I've been taking some of my cash balance consistently and reallocating some of that money into other high quality dividend ETFs like Devo and, like I said earlier, DGRW. Now, I think one of the main things a lot of us SCHD investors are also very excited for to see how this is going to turn out is the dividend and dividend growth, of course, and SCHD ETF on Twitter or SCHD Stan posted this. They said SCHD 2024 dividend growth, now updated with Home Depot's 7.7% dividend increase. That means the top 20 holdings are approximately 70% of SCHD. And even though the March Reconstitution will have an effect, this could change significantly. But currently, the average dividend growth of top 20 is 5.81%, and last year's dividend growth was 3.77%. So what this means is that some of the top holdings of SCHD as of right now, and of course things could change, it looks like there's going to be a significant dividend growth possible here in the future. Which again, at least for me specifically as a dividend growth investor, a long-term buy and hold forever investor, especially with positions like SCHD, this is very important to me because if SCHD for whatever reason slows down their dividend growth significantly, or of course if there's a year or two where the dividend growth sort of wavers, that would be a main metric that would possibly make me change my outlook on SCHD as a long-term outlook. Now going back to SCHD and looking at the dividend growth as far as dividends paid historically, the reason on why this metric is a cheat code, it's basically giving you as an investor a raise for doing absolutely nothing on your same exact shares of SCHD over time consistently as the years go on. Now, why is this important? Think about it the same way like it's your job. If you started working somewhere at 2014 and then in 2015 you got a 15% raise year over year, you'd be pretty excited. Let's say you make $20 an hour and you get a 15% raise. Now you're making $23 an hour. Now that you're making $23 an hour, let's say another few years go by, and now you're making, let's say, $26 per hour, just in a few year time frame. Now the reason I like to use a job example is because this is just like getting raises at your job. Only the difference is that you're not doing anything. You're not clocking in a single second. You are just owning an asset, owning a stock or owning an ETF. Again, for this simple example, it's the SCHD ETF. But you're owning something that is considerably paying you more and more over time just for maintaining ownership. Now, the reason that dividend growth is so important is because with this, you can see the snowball effect really to take shape in your portfolio. If you own, say, 10, 20, 100 of a stock or ETF that's consistently paying you more and more as the years go on, you are going to start to see the power of compound interest take place. Now, compound interest is the interest you earn on interest. This can be illustrated using basic math, like for example, if you have $100 and it earns 5% per year, at the end of that year, you'll have $105. And then by the second year, if you earn 5% on that, the numbers are going to get bigger and bigger as the numbers get bigger and bigger. So lastly, what am I planning on doing with my 559 shares of SCHD as of right now? And am I going to keep buying more SCHD moving forward? Well, the obvious answer is, of course, I'm going to continue to hold on to my 559 shares of SCHD that I have currently. And I'm also going to continue to buy a small amount of SCHD here and there until the Reconstitution happens and until we see which names are added and, of course, which names are taken out of the underlying index. Now that being said, I'm still as bullish as ever on the Schwab US Dividend Equity ETF, and of course, I'm super excited to see what the future dividends are going to look like. But when it comes to SCHD and the Reconstitution and everything else that's been going on with the ETF as of recently, I want to hear from you guys down below. Are you still currently buying SCHD as it sits currently? And if so, how many shares altogether do you have as of right now? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.